Investor confidence finished the week on a high following those comments on Thursday night from the European Central Bank that it would potentially intervene to acquire debt from those ailing European governments. However, the Germans came out over the weekend and attempted to pour rain on most investors' parades. Basically, the Central German Bank has said that it opposes the use of ECB funds to acquire those bonds, and that was also reiterated by the Germany's economy minister. In the meantime, however, Spanish bond yields continued to go upwards, and the Spanish government finally admitted that it may very well need bailout funds to the tune of around 300 billion euros. In the meantime, too, out of the US, news underpins the fragility of the US's economic recovery. Consumer confidence continued to fall, and there was also signs of slowdown in the US economy, with GDP numbers showing that in the second quarter, growth was down to around 1.5% from 2% in the first quarter. Looking at the markets then, in terms of the equity markets, the Dow surged by around 180 points at close, and most European indices also had a good day too, being up between 1% and 2.5%. In currencies, it was very much a story of risk on. The Kiwi leapt ahead, initially going through 81 cents US, falling back slightly, but it does seem like it's going to be on its way back there shortly. Data released by the Ministry for Primary Industries shows that for the year ended 31 March 2012, export revenues from wool increased around 18.8% on the previous year ended 31 March 2011. Farmers will however know that hides a glaring discrepancy, that being that since November or so, the price for wool has come off significantly. Looking at the last sale, coarse wool prices continued to fall, with a clean kilo of coarse on the cross indicator rate down to around $3.50. About a year ago, that rate was around $6.20 a clean kilo. Fine, however, is being supported a little bit better, but it is still around $2 a clean kilo worse off than it was around this time last year. There are two primary drivers behind this. One is the fact that the oil prices have significantly come off too and are at relatively low levels. Also, of course, the Kiwi dollar is relatively high, and that is certainly hurting demand. Both of these factors are outside of New Zealand farmers' control, but they will be hoping, for a number of reasons, that Kiwi dollar comes back under control and, paradoxically, that those oil prices actually go up.